Right, hi there, guys. We will start our learning on this first topic, which is regarding on supply and demand. Uh, Actually, this is the most fundamental concept, and for me, it is a very important concept for a Chartist to learn, for a technical Chartist to understand, so that because this is the very basic, right? This is we come to very basic. This is a very fundamental of how did we doing our analysis, all right? And before we go further into the very technical part and deeper knowledge in learning our technical analysis that include forecasting and prediction, you must understand what is supply and demand, all right? You must understand what we are doing here, all right? We are doing later on, so that you have the basis of what's going on, all right? What we are doing into, and so that you understand, all right, the concept of people investing in the market, all right? And it is very crucial knowledge and to make a high accuracy and produce an accurate probability trading results, all right? When we talk about supply and demand, actually we are talking about doing the technical analysis, all right? You have to understand and you have to master and really understand supply and demand concept. And in this topic, you will learn on how to draw supply and demand line in the practical session, but in this session you will learn on the theoretical knowledge about supply and demand. And I could promise you, if you understand supply and demand, but it is not really that hard, you will be in a good hand in the future, all right? Now one of the supply and demand is one of the fundamental concept in trading in any financial equities. Why? It is because actually any product, any financial equities has its own supply and demand. We look upon many other commodities, for example, like gold, all right, Bitcoin, all right. In any traded instrument, financial instrument, there is supply and demand of that equity. So that's why we need to understand supply and demand. And even in even traded shares, stocks, forex, it has its own supply demand chart. When we talk about supply and demand, we are talking about the technical analysis, all right? Technical analysis. And common sense that if you realize this, is that all people in the world that trade a particular stocks, all right, looking at the same charts information as you do, all right? When trading, even for many guys, right, saying that they do not believe in technical analysis, all right, they are always doing the fundamental, and some of them are not a believer in the technical analysis, all right? They might not even understand what is technical analysis, all right? They might not believe it because they do not understand what's going on, all right? And like I'm said, that everyone are looking at into the same charts when they are trading, all right? And we are not only focusing on the technical, all right, along with company financial background is actually the price movement, which is the supply and demand, is an very important criteria to be profitable, right? To maximize your profits, because it gives you an accurate entry and an accurate selling point, because it be able to say so to you. And if you are looking forward to trade in a very short period of time, then you might want to learn an effective supply demand or technical analysis strategy, all right? And that's why actually we need this analysis, we need this knowledge in order for us to be successful in the market, all right? Because when we try to get entry into the market, we want a good sweet spot that is the lowest price as possible, and right, and this technical analysis are also be able to tell you, right, what stock would be in the rally in the next term. All right. By knowing supply and demand lines, you will be able to identify this kind of stock, all right, this kind of shares. All right, and this is the beauty of technical analysis. All right, and many traders, all right, either short, medium term traders, use supply and demand knowledge to trade. All right, they use supply and demand knowledge to trade. All right, it is because when you talk about supply and demand, we are talking about the shares itself basically, and we are not talking about the fundamental. All right, we are not talking about fundamental, although fundamental is an important criteria to be inserted in our analysis. But when you talk about technical analysis, we are talking about the supply and demand, which is we want to identify the aggressiveness of buyer and seller in the market. All right, because we are taking into a perspective that shares or stocks itself is a product. All right, is a product that we want to know what is the sentiment behind, and we want to know what happened to the price now. All right, either it is overvalue, either it's very high or very low. All right, or it's an opportunity to buy. All right, that's why technical analysis give you a knowledge or information about what is the price now. Right, what is the price now? Either it is suitable for entry, or is it suitable for selling, or it is not suitable for buying. All right, so this supply and demand knowledge, all right, many successful techniques, all right, has been developed from supply and demand knowledge. All right, you would see a lot of people are coming out and introducing a lot of new strategies, either short term, medium term, or even long term. This is all from supply and demand knowledge. All right, and you must understand supply and demand. Then this would be very, very advantage for you, because you know the basis root of many successful strategies. And from this course, all right, you will discover a number of successful strategies or simple patterns that you can see, observe, and implement. Take action by getting in the market when you see the patterns, and be profitable right away in the market. Right. And again, this supply and demand it has been created because of repetitive of human behavior in investing. All right, and people are recreating, rebranding a lot of new strategies, a lot of supply and demand knowledge, and they recreate rebranding as a new product and strategy. All right, if you understand about supply and demand, this is not a new strategy. All right, this is not a new strategy. This knowledge, supply and demand, has been introduced to people a long time ago, since it has been created since the 1900. All right, and this is actually an important knowledge for you to master. And we start with identifying the supply and demand line in the market in this course. All right, and the supply and demand knowledge, or by learning the technical analysis, we would able to sign a pretty accurate sign of entry, and seeing if there is any reversal point that we at that point we want to take to be in cash and protect ourselves from the downside market, or any potential movements that move against us. All right. Now, when we talk about supply and demand, all right, before we talk about supply and demand, right, well, I want to talk about this one thing regarding on these two knowledge. Actually, this is when we go to any courses or any stock market learnings, a successful trading and investing strategy in any financial instrument involved in these two aspects. All right, and we want to talk a little bit about these two aspects, which is the fundamental and the technical aspect, which is the technical analysis of any equities, by meaning supply and demand. All right, first, these two criteria, these two elements affected, all right, affected the stock price in a very big way. All right, a very big way. It's affected the stock price very big. All right, and that's something we already know about. All right, and first we want to talk about the fundamental. The fundamental of a company, which include all the criteria in its fundamental financial income statement, which might be include earning per share, which is regarded among the most important ratio in fundamental analysis, along with other fundamental criteria that also very important, like other earning ratio, and people say what most important is future profit growth of a company, and even the simple revenue profits, and also the business common sense of a company. All right, is very important of analysis that we had to make in order to have a very successful career or successful stocks and shares. All right, and fundamental is actually a bottom approach. All right, it's actually a bottom approach of buying shares of a company. What we mean by a bottom approach, all right, a bottom approach is a process of identifying a company background. All right, is a bottom approach that we want to evaluate a company, and we want to see either the company has a strong business, either the company has a very good fundamental in any area that could attract a large amount of investors for a very long-term period of time. And actually, this fundamental is a long-term strategy, and a lot of investors like these fundamental strategies, because it's considered to be safe, is considered to be not aggressive, and some of the high income high net worth individuals or company really don't like too much volatility. All right, they like a steadily growth, and they like a company that doing the real business, and they do not like any speculation or of shares and stocks. All right, and what they want to identify from this fundamental analysis, all right, they want to identify, and in the end they want to identify either this company is undervalued. All right, it's undervalued from their valuation, and if it is undervalued, they will find that this is the price where it is an opportunity for them to buy, and they believe that the price will go up in the future, and or it is a overvalued price. All right, compared to its current price. When it's overvalued, they are maybe looking forward to sell, or they are maybe looking not interested into this particular stock. Right, if it is overvalued. So what they want to do is they want to evaluate a company in terms of its business valuations. All right, and then they want to see either the company is really good stock to buy or not. All right, it's this simple. And again, it is a long-term approach. And what do you think that what make it is a long-term approach. All right, and why is this happen? Because of if you see in terms of fundamental, they had to do research and they had to do financial analysis. All right, financial analysis from the financial income statement. Now we can see that income statement being introduced, being provided for investor in a quarterly manner, all right, in a quarterly time frame. All right, so actually in a year there is only 4 quarter where a company compulsory to give this quarterly report about regarding on their financial standings. And because of this quarterly results that is quite slow, all right, where the information is quite slow compared to the technical analysis, where we can see people behavior, trading and investing in the market at any particular time frame. The fundamentalists have to depend on the quarterly report, so they cannot do anything unless they see something happen in the company during the quarterly report being introduced to them. So that's why sometimes this had made it is a very long-term approach, all right, and they don't want right, and they do not want volatility, and they do not want any not stability of stock price. All right, they want a stable stock price with a good financial with a company that is having a good financial standings. All right, and while technical analysis, all right, in the technical aspect, let's say that all right, why this technical aspect has been introduced and has been a reliable method for a person or individual. Is not a compulsory, but is an optional for people who doing trading and investing to look at the technical aspect. When we say about the technical aspect, all right, the basis and root of this or this analysis is actually stocks and shares is actually a product itself. All right, it's a product itself. They do not consider that this shares or stocks is a company, although it is related. But actually, when you're doing analysis of in terms of the technical aspects, you will know that this shares and stocks is a product itself. All right, it's a product itself. All right, it's being open to people for buying and selling. It's open for people in the auction marketplace, for people to quote the ask and bid price. And actually it is in trader and investor sentiment of how many people are desire in buying the stocks and how many people are desire to sell the stocks. And this, because of this, all right, sentiment between buyer and seller, it affected the share price in a very big way. All right, just like the fundamental. All right, if that's why you can see if a stock, all right, if a stock has a very good valuation, has a very good fundamental, but if there is no trader or investor, all right, does not, all right, have a desire or has been not interested to buy the shares or stocks, all right, you guess what will happen next? All right, the stock price gonna flunk. All right, share price gonna go down aggressively, even there is a very good fundamental behind the company. All right, it has a lot of contracts awarded, but if there is no people are buying into interested into the shares price of that specific company, the share price gonna go down. All right, because the share price itself is a product. All right, it's a product that people buy and sell. All right, I hope you understand, because this is a very good understanding after several years of my experience in the market, and I'm looking forward. I'm always try to search for an answer for this, both this criteria. How does it impacted, or how does it affected the share price, right? And actually, when we talk about the technical aspect, all right, and it's actually it's actually a kind of behavior of people invest in a particular stock. All right, it's a behavior of people investing in the market, and this behavior is actually has been repetitive over and over again. It has been repeated over and over again. So that's why you can see this behavior has translated into patterns. All right, into patterns that is easily recognizable, and we can see that the progress of this pattern in the stock market. All right, in any shares. All right, in any shares, we be able to see the progression of this stock and shares. All right, stock and shares, and use this to predict what will happen next. And surprisingly, this is quite accurate. All right, it yield a very accurate result, and it yield a very good information about what will happen next on the price. All right, and most of people on the technical analysis use this information to write the wave, to write the swing, in order to get profitable in a very short period of time. Unlike for fundamental, all right, they does not care about either the price goes up or goes down. They are looking forward into a very long period of time, and they doesn't care about either the share price goes up, goes down, goes up, goes down. Either it is sideways and it goes up again. They doesn't care about it. All right, what they want to know is after a few years later, and then they want to know what will happen to their stock price. All right, and for technical analysis or technical analysts, they try to ride in the wave. They try to to take advantage of the upswing movement and be profitable, make money from it. Right, and that's we want to do. Right, that is what we want to do, and throughout the course you will learn how to be a good technical analyst by recognizing some simple yet very very effective patterns that is happen again and again and again in the market. All right, and this is people had been highly profitable because of this strategy, because it is not only reliable, it is very accurate, and it involved in prediction and good forecasting what will happen to the stocks in the next movement. Now, all right, we can see that in terms of supply and demand, we can see that the market move up and move down. All right, as we had been discussing this earlier in the basic course, that stock price move in a zigzag pattern. All right, in a zigzag pattern. All right, and then as far as we know, that there is no stock move in either straight up or straight line. All right, either, except that it is a speculation stock, but this is not normal. All right, this is not normal. And although the price goes up very quickly in a speculation stock, but it's also involve a very high risk, and if you do not have skill to get out from the stock, you might be trapped in and lost your money in the market. All right, and this is something that you don't want to do. This is something that you want to prevent yourself from. But after you learn some easy pattern that I'm gonna introduce in the whole course, please do subscribe again this whole course, because it is really effective, and it is really produce a good it is really enhance your skill and can help you making money in the market abundantly, and also protect yourself from any reverse or any major downward movement. All right, but of course, when you learn about all the skills, what you need next is that you must sharpen your skill over time. All right, you must sharpen your skill over time. All right, again, this might take time, and then but if you learn the right knowledge throughout the course and implement it, all right, you may get instantly profitable in the market. All right, as far as we know that the stock market and price, all right, is not random. All right, it is not random. You can see in the end anticipated the next movement by analyze the supply and demand line. All right, and then this is very, very good. It's because that we can identify what is the trend now. What is the trend now? So we want to surf along with the trend. All right, we don't want to go against a trend. All right, now you must understand that in any particular time there is buyer and there is seller. All right, there is buyer and there is seller changing hand. So what you trying to do, what our job is that we want to analyze which one is more aggressive. All right, which one is more aggressive? Either the buyer are dominating the marketplace, or the seller is dominating the marketplace. All right, if the buyer is dominating the marketplace, and this is the time where we want to get in the market and ride in the profit. All right, for the bullish trend, right, for the uptrend. Right, when we talk about the uptrend, right, we want to get into a majority. So if you are looking forward to get profitable in the market by buying low and sell at higher price, so you want to make sure that you ride along with the uptrend movement. All right, you are not looking forward to buy during a major downtrend movement. Right, you have to remember this, because of if you buy in an uptrend movement, it's easy for you. It is because majorly at the specific time frame that you buy the equity, most of the time of the candle, for example, it will majorly move in upward movement. All right, and supply and demand line also available and shown in any time frame. All right, it depends on what you are searching in the chart, and because of this availability of the price movement in minutes, hour, daily, weekly, and or even monthly time frame, you are able to take advantage of the movements, all right, according to your preference. All right, for example, if you would like to make money in minutes, so what you must do is actually you have to buy in you have to open up a minute time frames, and if there is a lot of high liquidity and frequent and high trading frequency of that particular stocks or shares, that is the time that you want to get into the trades and take advantage of the profits of the movement in minutes time frame. All right, it can be done in hourly time frame, daily, or even weekly. Usually when we talk about weekly and monthly, we are looking forward to a more longer time frame. All right, in a longer time frame. So demand, all right, supply and demand. Now we go into definition of a demand. Is actually demand refers to how much a product or service is desired by buyers. All right, the quantity demanded is the amount of a product people are willing to buy at a certain price. Right, now we can see that when demand is higher, all right, when a lot of people are desired to buy the stocks, for example, to buy a product, all right, if the supply is the supply going downwards, all right, it going downward, or the supply is even fixed, does not change, and the desire of people want to buy, and what meaning by this is more people want to buy the equity, it will resulted the price going up, all right, going up higher in the future, right? This is basic supply and demand knowledge, and all right, and what you want to do in the market is that you want to buy a share price that is really high in demand, all right, really high in demand. When the buyer become more aggressive, that is time when you want to get in the market, all right. Or if there is a lot of seller, all right, and the seller become less aggressive from time to time, that is when you want to get in the market, because you know that with a higher demand, the price will go up in the future. Now, right, what is supply? All right, supply is represents how much the market can offer. When we are doing the technical chart, is actually we can refer to supply. We can refer supply to the seller. All right, the seller. All right, and then we can see that through this diagram, when the demand is when people are less desired in buying any particular product, any particular stocks. All right, when the supply or the seller become higher, right, the price go down. All right, the price go down because the seller become more dominant in the marketplace, and there is no demand of people desired or interest in the stocks. This will be resulted the price going down in the future. All right. Right. We can say in a simple term that when there are more buyers demand in the market than sellers, it will make the price goes up, all right, in the future, all right, in the future. And when there is supply or the seller dominating the marketplace or the stock price, and then it will resulted the price going down in the future, right? So the question is, why did we need to know about this supply and demand? All right, later on you will see on how we doing the analysis in charts, and how does this demand and supply manifest in technical charts. All right, and and why this is very important? It is because the price, all right, the price is the end result of the battle between the forces of supply and demand of a company's price, of a share's price, all right. And the price actually, if we are talking as a technical analyst, we are consider, and we are what the price of the share price is what matter most for us, all right, which what matter most for us, because we want to get in as low as possible, and we want to sell it as high as possible for maximum profit in a very short time frame. All right, now when we talk about supply and demand, all right, before we talk further about continue about how does the supply and demand manifest in technical charts, let me introduce you, talk about the technical analysis. All right, the historical movement of the price in any equities reflects in the chart. All right, that's why we need chart. All right, it reflects all right, it reflects the supply and demand of any share price. And through this chart, we can see that the price movement in all time frame again. All right, we can see in terms of years, we can see in terms of monthly, and it is we can go as small as 1 minute time frame. And the analysis of this price movement in the chart is what we call as technical analysis. All right, and technical analysis is available in stocks, indices, commodities, futures, and any tradable instrument where the price is influenced by the forces of supply and demand. Now that is the theoretical of supply and demand concept in terms of definition. Now we will look over on how did supply and demand trend manifest in chart. Right? And when there are more buyers, all right, it resulted in higher demand of the share price. All right, this will affect the share price, all right, and resulted the share price to goes up in the future. All right, to goes up in the future, and vice versa. When there are more sellers or any sentiment change in the market from buyer to seller dominance, it will result in a lower demand and high supply of the share price. It will affect the price of the shares to go lower in the future. Right, as you can see here, right, when there is more buyer, all right, it's more buyer, right, and when there is when the aggressiveness of buyer become higher rather compared to its seller at any particular time, it will result in an increase of price over time. All right, if there is a seller aggressiveness become higher or higher than the buyer, then it will result the price to move down in the future. All right, in the next video we will learn and we will see in the real chart how did we draw this supply and demand, and how did demand and supply line manifest in a real technical chart.